Hello, this is a tutorial video for Aboard.Exchange, which is a new decentralized derivatives exchange. First, I'll introduce Aboard a little bit. So Aboard is a multi-chain, multi-platform, order book style decentralized derivatives exchange. The exchange will be a full variety, efficient, and all-in-one platform that brings TradFi trading experience to the DeFi world. Aboard is also the first protocol that uses smart contracts to channel crypto investors with DeFi fund managers. So to summarize, the platform is multi-chain, multi-platform, decentralized and transparent, has low trading costs and low latency with no gas fees, and also has fast withdrawals. Aboard is currently built on the Arbitrum network. In future, there's plans to add many more chains, including Binance Smart Chain and Solana. But for now, at this early stage, there's just Arbitrum network, so that's what I'll be showing you today in this demo. Arbitrum is a layer 2 solution for the Ethereum network, and currently Aboard has two trading pairs, BTC to USDC and ETH to USDC. First, we need some USDC on the Arbitrum network. After logging into the trading interface, we first need to select a wallet to link. Here we have four options: MetaMask, Wallet Connect, Trust Wallet, and SafePal Wallet. I'm using MetaMask as an example, so first I need to enter my password and then sign into my wallet. Then I need to deposit the token into the wallet on the site. Now I've paid the fees and deposited my USDC. You can see that it's here in my wallet. So I'd like to explain what this information at the top means. First is Oracle. Oracles are third-party services that allow smart contracts within blockchains to receive external data from outside their ecosystem. Aboard is using Chainlink as their Oracle, which is one of the most well-known decentralized Oracle providers. Index is the index price, which is an aggregate price based off price data from multiple exchanges and is used to trigger stop orders. Funding is the funding rate, which are periodic payments made to either long or short traders, calculated based on the difference between the perpetual contract prices and spot prices. When the market is bullish, the funding rate is positive and tends to rise over time. In these situations, traders who are long on a perpetual contract will pay a funding fee to traders on the opposing side. Conversely, the funding rate will be negative when the market is bearish, where traders who are short on a perpetual contract will pay a funding fee to the long traders. For 24-hour change, these two numbers represent the absolute amount and percentage change compared to the price 24 hours ago. The 24-hour high represents the highest price in the past 24 hours. The 24-hour low represents the lowest price in the 24 hours. The 24-hour volume, USDC, represents the trading volume of USDC in the past 24 hours. And the 24-hour volume, ETH, represents the trading volume of ETH in the past 24 hours. This is a K-line chart of price. You can choose the time interval at the top, and the green and red bars at the bottom represent the trading volume at each interval. Next, I'd like to explain what each of these mean. In positions, you can see the profit and loss of the target. In open orders, you can see unfilled or working orders. In order history, you can see past order records. In trade history, you can see the past trade records. And in transaction history, you can see the past transfer records of account assets. The order book lists the number of buy and sell orders placed in the market at each price point. Here you can see the volume of buy and sell orders at each price and the total amount of buy and sell orders. The trade section shows historic transaction details. Here you can see the time and volume of each trade. Red numbers indicate active sell orders and green numbers indicate active buy orders. Next, I'll explain cross-margin. Cross-margin is a margin method that utilizes the full amount of funds in the available balance of the relevant token to avoid liquidation on the positions with the same settlement token. Next is market order and limit order. A market order is an order that is traded at the current market price. You do not need to set the price yourself, so the order can quickly be made. With a limit order, you need to specify the transaction price, and your order will only be executed when the specified price is reached or there is a better price. This is like ordinary order in A shares. The price here represents the user's real-time order price. And here you can enter the quantity of the trading target or directly select the percentage of the position to place an order. So let's do our first trade. I'm going to trade on the ETH USDC pair. I'm going to select buy. I'm going to choose a market order. We have 5 types of leverage you can select on a board: 25x, 20x, 15x, 10x, and 5x. I will go with 25x leverage this time. Okay, and there you go. Our first order has been placed. Thank you very much for watching this first tutorial video. If you have any questions, please contact us on our social channels. You can find the links on our website.